What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 14th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we've got a variety of things to cover. We'll take a look over cryptocurrency markets. I'll talk about any updates I've made in the sense of my trades or positions, and outside of that as well, we're going to be taking a look over traditional markets and asking the question as to whether or not we are possibly entering into the early signs of a recession. And outside of that as well, we've got a sponsored interview with Matt Lazinski, who is the CEO at Travala, and we're going to see how the company has continued to expand. So we've got lots of things to discuss. Let's go ahead and start off by taking a look over the market. As we can see, most cryptocurrencies are in the green, and even though we do have more plays in the green outside of the red, the key thing to take away is that markets are relatively unchanged over the last few hours. We can see here on overall market cap, we're about at the same range here we were at back on October 11th. So over the last few days, markets have been relatively sideways. And in the sense of altcoins, we're still seeing, again, this pressure where altcoins are pushing up higher in this case, that are really starting to slowly try to gain market share. And we'll see that as we take a look at dominance. We can kind of see it here on the chart here. But again, I always like to focus on it right here on the actual candlestick chart. And we can see here that the gains that we had here for is really almost about a 24-hour period where Bitcoin over these two candles here was starting to bounce off really strong. We got the bump up to 5,700. And then after that, we started to roll back over in dominance over these last few days. And one thing that we noted in the previous video, as I take a look here, I usually, again, don't look at the daily or the 4-hour, but the one thing I was pointing out to people is that we were hitting resistance at a very significant level, right? This was a key support level. So what was previous support is now serving as resistance, furthering the trend here, the downtrend in Bitcoin dominance, right? And this isn't me trying to downplay Bitcoin or its usefulness. I love Bitcoin, and I own Bitcoin myself. But the thing is, as a trader, I'm looking for this shift in trend. And these very simple principles can actually give you a lot of guidance. And notice how I didn't even use my indicators here, right? Again, I could use my indicators. I could have pointed out that on the 4-hour here, for example, the squeeze momentum's going down, or there's a cross on the MACD and the divergence is going lower. I could see the stochastic RSI was weakening here, right? These things do come into play, but price levels tend to be some of the most significant and some of the most underrated. Right? But let's go to the time frame that we care about, the weekly, the thing that I had opened up here at the beginning, right? We still have all the things coming into play here. All of our indicators, again, MACD going down. We've got the stochastic in bearish territory, and the squeeze was dropping for weeks on end. Now, I want to share with you guys real quick because I always like to make sure you guys can follow along with me. And I know some people didn't get to watch my macro trading video, and that's fine. If you guys would like these indicators, you can use TradingView, tradingview.com, which is what I use for charting. It's a free tool. If you register an account, they'll stop spamming you with as much advertisements or requests to register an account. But there's really 3 different tools here. You basically have to type squeeze mom, and you'll be able to get the squeeze momentum indicator. It's only, actually, no, I don't know if it'll show up that way. I usually just type in the squeeze momentum. And then there should be one by some Lazy Bear down here. That's how you get that one. And then for the MACD, just type in MACD. It's right there. It's one of the built-in indicators. And the stochastic RSI is right here. So again, you just search them up, implement them. You can change the colors all you'd like, but I keep things in their default setting. I think it looks nice. And the major thing here, to go back towards what we were really talking about, indicators here on the weekly are showing a downtrend. We're hitting historical resistance here. We've had multiple weeks where we've been in the red for Bitcoin dominance after more than doubling in Bitcoin dominance, keep in mind. So I think everything here is really checking out. Not to mention, I think we're finally starting to have price discovery of a bottom in the overall crypto market, right? We're setting higher lows. We just set a low at $200 billion, which is 2 times more than the previous low after the 80% correction. So these are usually the signs that, it's time for some risk taking, right? Again, I'm not going to advocate you guys do anything. I'm just showcasing that's my thought process here. Now, taking a look here at I shouldn't want to do too much price analysis. I do want to share with you guys my changes in my trades. Okay, so first off, we have to talk about Link, right? I've been bouncing around with this one. I was really uncertain as to how I actually wanted to go about playing Link here. So we made a successful trade the other day, where we sold it at 288 after holding it for a while. I rebought in a portion back here, and then I basically sold that portion as well back here at 262. So I didn't really make much profit off of that, to be fair, but I didn't lose any at the end of the day, which is good. And the reason I did that is I started to notice that we were setting up lower highs and we are hitting consistent resistance here at 280. So I didn't feel safe holding that additional portion of my portfolio, and I wanted to cycle it into another altcoin. And the other altcoin that I went into is Basic Attention Token. So I already held beforehand a position in Basic Attention Token, but as we can see here, let me actually, sorry, I'm going to use the USDC chart. This is what I wanted. We can see here, I think my thing will adjust here. Oh, actually, no, I only put it on the daily time frame. I'll put it on the exact point where I bought it. So it's right here. I bought it at 19.7 cents. And since then, I'm actually quite up on the trade quite nicely. So it was actually good that I cycled out of my link position. But this is going to be a position I hold for the next few days, next few weeks, most likely. And the reason why is I do believe we're going to finally start to see BAT break out. I really like the chart here. It's a matter of when we really get past 22 cents. That'll not only be a good increase from where I bought in, but also I think it's going to start breaking out to one of these higher levels, probably up here towards around the support range, around 28 cents. So we'll have to see. Compared to Bitcoin, though, this is really not that much, and it's not asking for much, right? So we'll go ahead and take a look at BAT BTC. Take a look at it on Binance here so you guys can get a good picture. All right, this is what I was feeling is going to happen. You can see here I've got my little charts here, right? We're having this kind of growth in each of these little mini cycles that we're having, and I think that we're going to, again, reach up. I think I had my position range. Where was it? Oh, yes, it was to come up towards around this range here, somewhere between these Satoshis, right? Between 3,600 and 3,300, all right? So that's my general range here, which would be a nice rally here for Basic Attention Token. I still think it's got a long way to go, right? I mean, we've seen it much higher compared to Bitcoin in the past. All right, so I wanted to talk about that. Let's go ahead and talk about this discussion of whether or not we might be entering into a recession, right? We've been seeing a lot of warning signs. I mean, for months, you've been hearing about the inversion of the yield curve. You've been hearing about, for example, what's been going on in equity markets and what's the concerns around the trade deal and what's going on in Brexit and the currency crises we've seen across the world, right? There's all kinds of little small things. And there's some that I even didn't name there. The shadow banking crisis that's been kind of brewing behind the scene in a lot of developing nations and India and China. There's all kinds of, concerning factors here, right? But let's go ahead and talk about really at the end of the day what's going to spark a recession, right? Well, we have to understand about what we're talking about. Are we talking about the overall global economy? Are we talking about equity markets, right? Recessions are generally used when you're talking about the overall economy, when you're talking about GDP, things of that sort. But I think the thing that most people are focused on when they think about recessions and what they're wary of investing in is equities, right? We already know the economy is slowing down. The global economy can't just keep growing 24/7. There are credit cycles, right? And I think we're already very clearly at the later stage of that. But the things I'm very concerned about are, what are the signs that we're seeing this in equity markets? Well, there's really two things. First off here, there's a new recent chart here on LMTR that showcased the insider selling. And if you guys don't know what insider selling is, this is when company insiders, employees, usually board directors or executives who own shares in the company are starting to sell said shares, right? And interestingly enough, I call me crazy. I just might be crazy on this. Interestingly enough, right as we're starting to see record amounts of insider selling, to be fair, not a big break off of what we saw back in 2006 or 2007, right before 2008, and then also here just back a few years ago, back in 2017, we are seeing record levels of insider selling since all the way back during the dot-com era in 2000. Yet at the same time, companies feel it's a bargain to pick up their own stock. Interesting. It almost seems as if they're using the company's balance sheet to buy up more and more equities, right? Using the company's cash as a buyer of the stock that they're selling. It's almost like they're trying to get out, right? And this is the broken incentive structure of stock buybacks, right? Because if you had to invest that cash in something real, right? If you had equity in that company and your company had a ton of cash in its balance sheet, like the corporations have been for the last decade, they've been cash rich and they've been getting richer and richer every single cycle. wouldn't it be great if they actually invested it in real things? If they were, in a sense, not really forced to, but if they couldn't repurchase their own stock, there's really two things you can do. You can raise wages, or you can invest in factories, research and development, product development, whatever it may be. Real things. No, instead, there is a system now where companies, if they have enough, the people inside the company have enough voting rights, they can instruct the cash that is on the balance sheet of the company to be instructed towards buying up shares, right? And the whole idea is that this takes shares off the market and it boosts earnings per share for a lot of people. So does it create any real value though? No, it doesn't create any real value in the economy. It just makes sure that people hold their bags of your company. Right? That's all it is. And it's so funny people talk about crypto being a scam because there's incentives for people to hodl and things of that sort. This exact same thing happens in other markets. It's the reason dividends are paid out, right? So you see this kind of craziness where there's not much real investment in the economy right now, and a lot of it's going into an artificial market. But as we're seeing record amounts of, insiders selling, we're also seeing a very cash poor market. We talked about this in early October. Another great chart here from LMTR. We've been hovering ever since we're here in 2018, being at a point where we're so excessively exposed to equities, right? Back here during these recessions, we're cash rich. People have sold equities. People are ready to enter into the market. They're waiting for an opportunity. We don't have that kind of cash to spark a crazy rally, right? And this is all coming at a time where we already have a lot of warning signs that there could be a recession coming. Okay, so I had to pull this Bloomberg article. It's a really good one here. I had to pull it into a private window because I ran out of my free article limit. But you can see here that we're hitting a 27% chance of recession within the next 12 months, right? So this is an indicator that combines a lot of what's actually more of an index in a sense that combines a lot of different indicators across the board. And we can see here that ever since, back here in 2004 going into 2008, we started to see the early warning signs. Same here in 1999, going from around 19% all the way up to a 98% mark and inevitably hitting a recession, right? And this was due to the dot-com era, right? The dot-com bubble bursting, as well as the attack on 9/11. These things in conjunction, as well as what happened in 2008, are very clear signs of when we lead into recessions. And the indicator the index does a pretty good job of reading that. But we can see here that throughout 2010 to 2018, right, we still have yet to really have that cyclical cycle just yet. We've been having a lot of these pop-ups, these sudden uncertainties in the financial sector, and then we have resolve where most of it comes down. But the interesting thing to take into mind is that we're setting higher lows every single time. And these pop-ups are getting higher and higher. So I think this is showcasing the problem that we have, which is that we've been offsetting things. We've been allowing negative yielding bonds to persist, now becoming a 17 pushing towards $18 trillion market. We have also had central banks like the Fed and the ECB putting massive rounds of quantitative easing, continuing to do forms of quantitative easing, such as, for example, their involvement in the repo market. And then outside of that, they're going into actually implementing another round of QE, at least in the United States. And you can bet if the United States, which is in one of the most strongest positions out of most central banks, if the Fed has decided it's going to keep repurchasing financial assets, you can bet your butt that Japan is going to continue to do it, that the ECB is going to get back on track doing it. Everyone's going to start doing it. Everyone's going to fill the punch bowl, because if the Fed allows it, everyone else is going to do it. It has to do with the balance between currency markets and stimulating markets, right? So we're seeing this, and it's going to be the same case here. We're going to see, right, we've already seen the spread of the yields on treasuries dropping. We're going to see treasuries probably drop negative in the long term if we continue to see this kind of craziness. Corporate margins are dropping, meaning stock buybacks are weakening. And a lot of people, the Fed included, was talking about how, and as we talked about with the kind of issue within the repo markets, we're now seeing an issue of illiquidity, right? So there's lack of cash. So the stock buybacks can't be as frequent in this case. Cash is covering other things now. Corporate margins are dropping, so the overall cash supply is shrinking. So if stock buybacks are what are keeping the market up, if they're the only net buyer, non-financial corporations, then who's going to buy, right? That's the whole kind of thesis here. There's a lot of things going on, guys. It's hard to kind of, put it all into one place. But the key thing to take away here is that we've got a very interesting situation on our hands. Now, one little other thing I just wanted to toss your way, guys. I think we all kind of get the gist here of, this theory of a recession coming. I'd like to hear from you guys, whether you agree or disagree. Let me know down in the comments down below. Get a discussion going. And also, along with that, I found this interesting article on Bloomberg that said that we lose over $400 billion of food before it reaches stores. And I was very interested in this. So if you actually read through it, it's a very short article, but basically summarizes how through two really serious errors, the supply chain system of getting product A to store B in this case, getting something from point to sale, and then also the issues of humans, especially I guess kind of in Western markets where we're in such an abundance of food, we don't really probably treat it with the respect of some people in developing countries, that we waste a lot of food. Where we just make poor consumer choices. We don't plan properly when we go and shop, right? Sometimes we're spontaneous about things. We get things that we don't inevitably consume. I'd like to know from you guys what you think we could do to better fix this kind of stuff, right? So I think that the statistics was 37% of animal products, 37% of animal products, and potentially a fifth of fruit and vegetables may be wasted in this case or go bad. So what do you guys think we could do to help kind of fix this issue? Especially knowing the kind of energy input that you have to put into meat, this makes me really concerned. I mean, this actually doesn't make me concerned. It makes me excited in the sense that there's a big gap we could easily fill in the sense of potential wastefulness. Anyways, I just wanted to leave that with you guys. I know it's not crypto related or generally the topics to talk about, but leave a comment down below if you have a solution for that. I'd like to get everyone thinking on that. Outside of that as well, guys, let's go ahead and dive into our interview with Matt Luzinski from Travala.com. Alrighty, everyone. So in today's video, we're going to be spending some time to sit down with Matt Luzinski, who is the CEO and founder of Travala.com. Matthew, thank you very much for making the time to talk, man. It's a pleasure. I know we talked back a few months ago, but Travala's been expanding a lot since we last talked. So how have things been for you, man?
Yeah. Hey, Nick. It's been non-stop growth, really. There's been so many changes that have happened at Travala.com, from our white paper 3.0 release to the move to ByNance Chain for our token, increasing the amount of properties we have on the platform and really scaling up the team. So there's been, so many different things and so many different angles that we've been pushing on and growing in, and it's been really, really incredible to see.
Yeah, I mean, honestly, dude, I think it'd be an understatement to say that you guys have been a nimble startup. Like, you guys are moving very quickly. You're working, I think, in the sense from the resources that you have, you've done so much in the short period of time that you've been around as a startup. So I'm real curious to start off and go down the list of some of these topics. The first thing that interests me is you guys have migrated, as you mentioned, to the ByNance chain from the NANO blockchain. So what are some of the benefits that come with that? And what kind of pushed you guys to make that ultimate decision to switch over chains?
Yeah, so it was a very difficult decision actually to make. It took our team some time to sort of really weigh out the pros and the cons to move, because it is a big thing, and it was really because we wanted to align ourselves with the leaders in the industry, and Binance right now is leading this industry. Some say monopolized, others say innovative, moving first, making the first move, and they are, and that's what we believe we're doing in sort of our sector with travel and blockchain itself, and we wanted to align ourselves with them, and it made sense for us firstly to move to the ByNance chain. We saw that the scalability there was there, them being built on Cosmos and us being able to create those environments in Cosmos ourselves whilst using a token on ByNance chain really made us understand that this is a vital move for us, and this enables us to build exactly what we want to build with no limitations.
Absolutely. I think, with considering the priorities of what you guys have in mind, you obviously want to make cheap, fast transactions in this case, not to mention as well, it's a loyalty program at the end of the day, in a sense, these utility tokens. So in this case, you want to be able to reach a wider retail audience. And, say what you want about Binance. I have some things I really like about Binance, some things as well, of course, with any exchange that could be improved. But I think they've been really forthcoming in being able to produce, things outside of just being an exchange, producing their own chain, encouraging and investing in early projects. I think it's really good to see, and it's the kind of like fostering of an ecosystem we need in the crypto space. So it's good to hear you guys have made that switch. Another thing as well that you mentioned that I'm really curious to kind of get your pick your brain on and kind of get a piece of the data here, because there's so much of a leap that you guys have gone through in the sense of property numbers. How much properties now do you guys have? How much of a difference is it from when kind of maybe we last talked, if you had to guess, and what areas of the world are these hotels?
So when we last spoke, we had just under 600,000 hotels. It was 550,000 in total. And since that was actually 3 or 4 months ago that we spoke. Now since then we have added another million properties. So we've got 1.65 million properties on the platform. So exponential amount of growth there. This puts us on the same sort of available room nights as the likes of like Booking.com and Expedia, for example. So it really puts us to the same standard and the same level as what they're able to offer, which really, sits us in our position right now for scaling, which is exactly where we planned and where we aim to be. So, that in itself for our user base, that's all over the world. That's every single country, 210 different territories. We have most properties on the platform right now.
That's awesome, man. So as you guys have expanded to this large number of properties as well, have you seen over time as well? I know we've kind of taken a look at the growth numbers here on the channel from time to time. What is the growth numbers looking like? Is it, according to your estimates that you guys had back a few months ago, are you guys growing at the normal pace you expected? And if so as well, are you seeing more and more people still using cryptocurrencies? Is the vast majority of clientele still using crypto as payment?
So since we last spoke, we actually... initially, we only had PayPal on the platform and multiple different cryptocurrencies. Now, since then, we've also added credit and debit cards. So that's international cards all over the world. And since then, we have actually seen a reduction in the amount of cryptocurrency used. But that said, we have taken more bookings. So, we've just sort of opened up to a new market that weren't able to book before. Now, we were seeing about 80 to 85% of our bookings come through crypto. We're now seeing about 60 to 65. So it's not that big of a reduction, but we have seen that, and we are able to gather that data together.
It's still, it's amazing as you guys have grown, and crypto still plays that big of a role. And I'm all for example, there's a lot of debit cards now that actually allow you to expend your cryptocurrency. It's just a payment method that I think a lot of people in the West kind of prefer. Yeah,
I agree. And, it's... we wouldn't know if someone's using a crypto card, for example, because it still comes through as the debit card. So there's, in that sense, we are still taking a lot of cryptocurrency bookings, and it's really it's our main market. It's where we've come from. It's what we believe in, and it's the ethos of the platform.
That's awesome, man. Another thing I wanted to ask you about, because, a lot of people on the channel might know, I'm currently working on my own startup at the moment, and we've been having some conversation back and forth over the last few months about raising equity. I know you guys are still a relatively early startup, but you've done so much, and I think with a limited amount of resources, but now you guys have decided to do an equity raise of some sort. So do you want to provide a little bit of details on that, talk about your story, how things been?
Yeah, so as people know in the Travala community, and obviously we will do now, we did an equity crowdfund in March of this year. That closed a few months later, and we raised around £375,000 in total, so $500,000. Now, that was really successful. It enabled us to market our platform through the crowdfund itself as well, gain more exposure, and we are looking to do another one. This will be crowdfund 2.0. Giving the chance to the smaller investors, the retail investors, to actually come in and get equity in our company. This will be done alongside, VC and seed investors and sort of like high net worths as well, who we are actively speaking to. But yeah, so like that's sort of like a world exclusive, and anyone who wants to join from the channel, come into our Telegram, come onto our Twitter, let us know, and we'll obviously be announcing that in the next few months of when it's actually taking place.
That's awesome, man. So in this case, just to clarify, you said, is it just accredited, or is it kind of like it's a broad range of basically investors in this case? Retail investors can as well?
Yeah, retail investors can. This excludes people from the US, from Canada and Japan, unfortunately, because we are a UK-based entity, and that's just the law.
That is, yeah, you're right. I know that about the kind of the equity raising laws and stuff. It's crazy. This, again, I think kind of propagates why we need crypto as kind of the framework for the world so we can do these things. But it's a regulatory barrier in that case. But I think that's awesome. You guys can reach a massive retail audience globally still, even if you can't reach the US or Canada.
Yeah, exactly. And, it allows us to give something to our community, something to our believers. Not only, we have a cryptocurrency that can be used on our platform, and we also, can offer this piece of our business through this crowdfund. So yeah, second crowdfund 2.0 happening. I'll be announcing in the next few months, and I'm really looking forward to sharing that.
Awesome. Now, outside of that crowdfunding, Matt, is there anything else that you think people should look forward to on the platform? People who have booked before on the website, maybe people who are just starting for the first time and haven't booked just yet. Are there any things that you guys are working towards that you'd want people to know about?
Right now, we're actively pushing more cryptocurrencies onto the platform. We've just today actually released our partnership with KuCoin, with their KuCoin shares, and we'll be pushing that through all their channels. We will be growing out our affiliate marketing channel, which will allow influencers, maybe such as yourself, and businesses as well, who have users to actually join part of Travala and create revenue for themselves through the affiliate program. And we will also be growing out the decentralized elements of the platform. If anybody wants to take a look at our white paper, we have some awesome things and awesome additions that we will be growing as we migrate over to ByNance Chain, start utilizing the Cosmos ecosystem, and really creating a scalable and wide set business for the future.
Yeah, I'm really interested to see how you guys use Cosmos in that process, and how you go about improving the loyalty road program and continue to grow out your properties even further. I got to say, Matt, it's been awesome to see you guys grow. I mean, obviously, you guys are partially a kind of crypto company in the use of the Travala token or the AVA token. But I think more than anything, what's so awesome to see is that you guys have been able to do so much in a short period of time, and really, I think, build a possible major competitor to some of the major booking websites like Booking.com, Trivago, all these ones that have really come up over the last few years. So I'm excited to see how you guys do. I'm glad to be a part of the company with you guys as an ambassador, and I wish you all the best in the sense of what you're doing. And we'll leave any links down below for those of you out there who want to maybe look a little bit further in Travala, or maybe learn a little bit more about the things that we discussed. But Matt, thanks for making the time, man. It's always great to chat, and glad to hear that things are going well for you guys.
Thank you very much, Nick. I'll look forward to catching up with you again in the future.
Awesome, man. We'll do it soon.